Today, we're talking about Symbotic. This is a company I've been covering for quite some time here. I've got a few articles and videos on it. I'll link the most recent ones in the description below if you're not familiar with the company. But I figured I'd start off with this quick little 1-minute video, kind of give you an idea of what their system looks like. They just held their investor day not too long ago. So I'm going to mainly focus on that today and a little bit on the stock and what I think. So let's start off with this video of Symbotic. So it's a warehouse automation company. And if you watch this video, it looks pretty advanced. They've got these bots that are fully autonomous. They've got a lot of patented technology. They're claiming the fastest intake and retrieval system on the planet. There's the bots moving around, can retrieve any case in under 3 minutes. The bots are traveling 20 plus miles per hour. They're fully autonomous, as I said. They've also got this depalletizing patent, which you can see here, basically stacks it up like a big Tetris board, making it very efficient, for stores. It's a very interesting under the radar company. I don't know anyone else really talking about it. I don't really see any other videos on YouTube or anything. But since they IPO'd a year ago, stock was up like 500% at this peak here, and then it's since come down about 20%. It had a huge run up, as you can see, in year to date and in June here. So it started to come back down to earth, as it should, down 20% from that peak after the massive run up. But so we'll talk about the Investor Day presentation first, and then we'll get into some stuff related to the stock and the company. So during the Investor Day presentation, they were telling me everything I wanted to hear, how they're fostering this culture of innovation within the company. They have this lofty goal to move every box in the world. They're saying how they're on the cutting edge of this intersection between artificial intelligence, digital twins, and autonomous robots. It all sounds great. And, I'll talk a little bit about my skepticism at the end because I don't know how much of it is true versus just, capitalizing on the hype and using all these buzzwords. But CEO Rick Cohen said, "We are the best company at moving boxes in the world." He made some very bold claims. He said he thinks he's one of the world's experts in distribution. And he does have the track record to back all this up. He's been working with robotics for a very long time. Symbotic's been around since 2007. And what I really liked about this company, and it kind of drew me in, was that Rick Cohen is a CEO. He started this business to solve a problem within his other business, CNS Wholesale Grocers, which is the largest grocery wholesaler in the USA. So he basically started Symbotic to fix, the warehouse distribution issue that business experienced. So he obviously, comes from this industry, understands there's a need for it, and they've got around 15 years of R&D under their belt already, which is part of their competitive advantage. We'll look at their moat here in a second. I loved they were saying during the presentation, Symbotic is this innovation lab. It's going to continue to foster a culture of innovation in tandem with making customers braggingly happy and growing as fast as possible. So those are like their 3 big goals. We're going to keep growing extremely fast, which we'll look at their growth rate in a second. Is they're moving very fast. Fostering this culture of innovation, which I love. Sounded a lot like Tesla to me. And make customers braggingly happy. Amazon is the company to follow on that. We see how that has worked out well. If you make customers happy, you're going to succeed. So like I said, he claimed that Rick Cohen understands warehouse distribution on a level that maybe 10 people in the world do. And I thought it was really interesting that they mentioned they're finding luck actually recruiting people from these self-driving programs from the likes of Cruise, Waymo, and Tesla, who've kind of become disillusioned that their work is ever going to get publicly recognized just because of all the regulatory hurdles as we're moving into this world of autonomous cars. Are these things ever going to truly come to 100% autonomy and be allowed? It remains to be seen. And obviously, working on these autonomous bots in a factory, much lower, regulatory hurdles to jump through. You don't have to really worry about people's lives. They're not at stake. These are just bots doing retrieval in a warehouse. It's not like people's lives are on the line. So as you can see, part of what makes up Symbotic's moat, they've got 490 plus patents issued. Again, they've been at this for 15 plus years. Billion plus they've sunk into R&D over 16 plus years, sorry. So they've got this patented depalletizing tool, which you kind of saw in the video there. Proprietary software, and their system is a full solution. It handles inbound, outbound, everything from the second that package comes into the warehouse to it leaving. And they've got these autonomous bots, which they said is basically integral to the system. It wouldn't work without autonomous bots. You have to have autonomy, which they've been working on for the last 3 or 4 years. So They see a massive total addressable market. And obviously, with that, that's inevitably going to attract competition. So, here are some of the strengths they outlined, and they kind of brushed off the competitors. So, they say that they're a well funded startup. They've got this huge $12 billion backlog, again, on the leading edge of AI, machine learning, and robotics. Their system costs $100 million. This part was really interesting to me as well. So that's obviously a barrier to entry, because even if you have the money to build it, you have to be able to test it, which Symbotic is now doing through the use of digital twins. So they're able to test out these products in the virtual space before physically building them out. I think this is something you're going to see more and more. Obviously, Palantir is a company, popular doing work in that kind of space, just helping companies become more efficient. Obviously going to lead to huge costs and time savings. Now, they said their error rate is currently 1 in 10,000, and they project by next year it'll improve to 1 in 1 million. And in warehouse automation, the better this number is, the less human employees you need supervising. And Cohen had said how an error rate of even 1 per 100 or 1 per 1,000 isn't good enough. It will lead to bankruptcy, because it's just not, the system is not efficient enough. The Symbotic system can also be retrofitted, done in stages, and modularized, which they also kind of claimed is part of their competitive advantage. Other solutions on the market may not be able to retrofit existing factories. And so they listed a few of their competitors. They called out Witron, which they said is big in Europe, but can't do what Symbotic can. There's Canap, but that focuses more on e-commerce, so they don't really run into them. And Dematic. And then here's kind of how they characterize them all in their presentation. You've got these legacy alternatives, and you've got point solutions, which my understanding is they claim that these point solution companies face single points of failure. Obviously, Amazon is big. They have Kiva, but they're not sharing that with anyone. They're keeping it to themselves. Apparently, so I have to look more into these competitors. If you know anything about these companies, if you're familiar with them, please let us know in the comments below. Give us some useful info on there that we can look into. But Symbotic claims to be, well ahead of all these companies. Now, Christian Mori, he's the SVP of hardware engineering. And in the past, he worked for iRobot, Boston Dynamics, and Rivian. So he came from, quite a background here. And he just said that Symbotic is such a unique company. And management, again, kept echoing this idea that they're like on the cutting edge of AI, machine learning, robotics, and the intersection of those three things. Now, what I really like about the business here, I think long term, you can see here, the money is in the recurring revenue. So they obviously charge for these installations, but over time, they're going to start making more annual recurring revenue that's based on software and maintenance. So there's this mandatory software program you have to pay for the system to run correctly. And as you can see here, in Q2 2023, they're up to 9 deployments, 9 active, fully rolled out deployments, and they're making $9 million in recurring revenue. And that's just been steadily increasing, as you can see. Obviously, the completion revenue is a little more lumpy, but it's also been increasing, if we look over time. What excites me about this company is that they have that recurring software element, because over time, they said how that is obviously a higher margin business, and it will enable them to, get their profit margins up to 40%. We'll touch more on the margins in a second here. So what I like and what I don't like about this company. It's very under the radar. Like I said, I don't really see anyone talking about it. That's always good. We want to get in before the crowd. It doesn't seem like there's major competition yet. Again, I have to look more into those companies, but from what Symbotic claims is that, they are not on par with what Symbotic can do. But if this really is such a big industry, it's obviously going to attract a lot of competition. So is Symbotic's moat strong enough? What is going to keep them ahead? It's a very nascent industry. Symbotic is also in its early innings. They only have 9 fully rolled out deployments here. I was confused for a while. It's a bit confusing because they have these, they call it active deployments. They've got live deployments. But so the way I understood this after the presentation, at the bottom here, you can see these are like fully rolled out and up and running deployments. So they have 6 of these previous generation systems and then 3 of a newer version. So they've got 9 total fully active deployments. Then there's 28 that they're still working on. So the 9 are up and running. These 28 are not fully rolled out yet, but they're working on them. That's my understanding. So again, they only have 9 systems that are really functioning. So it's very early. So again, the stock is up massively. Starting to drop from its peak, probably still overvalued. They've got this massive backlog, which Walmart makes up a good chunk of. Walmart actually was very involved with this company. They want Symbotic. They have a contract to retrofit all 42 of their regional distribution centers. So that also got me very interested in the company. If Walmart is, not just doing one of their factories, but all of the regional distribution centers in the US, that's when I was like, all right, maybe this company is worth paying attention to here. And again, to just give you an idea of the system, customer pays anywhere between 50 and 100 million, saves them $10 million a year. So, it's got a 25-year useful life, $250 million of savings. It sounds like they want to continue to innovate. Obviously, if we look at the balance sheet here, they are continuing to pump a lot of money into R&D, which I think is good. 31 million in the last quarter. Now, one of the things I don't like is they've got a lot of stock-based comp. So obviously, as we can see here, they dress it up and make it sound better with the adjusted EBITDA. But if we look at the actual net loss, aka their actual loss, it's 55 million this quarter, 36 million of which is stock-based comp. Now, the last few quarters, the stock-based comp has been, up quite a bit versus last year. So you're getting diluted. That's never fun for investors, outside investors, great for people within the company. But they did say during the investor day that they're expecting over the next few quarters the stock-based comp should decline. So hopefully that's peaked. But, still very significant because if you, subtract that 36 million in stock-based comp, that's making up the majority of their $55 million net loss. I'll pull up my spreadsheet really quick here. As you can see, they're growing very fast. Revenue Q2 came in at 267 million, 177% growth year over year, and higher than what they had projected for. But again, obviously stock-based comp, the shares outstanding are continuing to increase here, and they've got a pretty substantial net loss. So let me know what you think here. I think the only concern I would have is how serious are these competitors? Are new competitors going to emerge? Because otherwise, it seems like they're set up. They're in a great position here. I actually know someone who's going to be touring one of their facilities next week, so hopefully get some insight from there. See what it really is all about inside the warehouse. But yeah, let me know what you guys think. If you know anything about these competitors, let us know in the comments below. And if you enjoyed this video, don't forget to subscribe. Drop me a comment below, and I'll see you guys next time.